What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It is a good Friday, and we've got a lot to talk about. We have that H20, or essentially a ban, an export ban on the Nvidia chips. We'll talk about that. We've got earnings coming up with Tesla reporting on Tuesday next week. Google reporting a little bit earlier than they normally do on Thursday next week. We've got trials for Meta. We've got trials for Google. We've got Apple trying to make more of their phones in India. We've got so much to talk about. Better kick things off like we always do with Meta Platforms. Start of the week at 554. This one drifted lower. In fact, it broke through an area, a clear area of support. That's not good technically. We'll see if the company is able to bounce back when they report earnings over the next week or so. Meta Platforms finished the week at about 501. Equity Empire is in full swing. We've posted earnings videos for Wells Fargo, JP Morgan, Goldman Sachs, Bank of America, Amex, ASML, TSM, Johnson & Johnson. You're going to get it all over here. And if you've already subscribed, we've only been launched for a week. And my goal was to send an email for everybody that signed up in the first week. I'm certainly going to do that. But so many of you signed up. Overwhelming support for Equity Empire. Overwhelming support for what we are doing. I just want to thank all of you. There's links down below. If you want to join us, you can. Thanks again for everybody for your support. A lot more improvements. What you see here and what you're getting in the beginning is just a small taste of what is coming. We're very excited about all the new features we'll be adding really quickly over the next several months. Now, the FTC is in full-blown tech takedown mode as they are in trial with Meta to force them to divest away from their WhatsApp and Instagram applications, which they bought with approval, I might add, from, I believe, either the FTC or the DOJ or both when they originally made those acquisitions. Meta saying in a statement that it is absurd that the FTC is trying to break up a great American company, and that at the same time, the Trump administration is trying to save a Chinese-owned social media site called TikTok. It makes no sense for regulators to try to weaken U.S. companies right at the moment we need them the most to invest in winning the competition with China for leadership in AI. So Meta going right at the heart of the matter. I don't know how that plays legally. I think it plays a little bit politically, certainly on both sides, actually. But I don't know how this will play out if Meta is forced to, divest away from WhatsApp and Instagram into a hot IPO market. And we're really going down after appeals, after other negotiations. So we're even assuming that Meta is losing this, which according to the legal, I dug up some legal opinion on this. People believe this would be rather extraordinary to do this. You also have competition, obviously, from TikTok, YouTube, X, others out there. We'll get to a story with OpenAI. They're thinking about launching their own social media platform as well. I don't know if that's a joke or if that's a real thing, but we'll see here. But most people would view a breakup of this to be rather extraordinary. But we saw it with Google. They're on trial this week to break up their company as well. Now, Mark Zuckerberg did consider divesting away from Instagram in a spinoff in 2018, essentially thinking that they would have to do this anyways based on regulation, based on like an FTC suit. So they thought about doing it early. We'll see what happens. Again, first of all, Instagram and WhatsApp are worth way more than what the company paid for them. In a hot market, if you get a hot IPO market, it might benefit shareholders a little bit. What this could do is instead of centralizing a lot of the AI spend, so when Meta is spending on AI, they're obviously distributing that to Instagram and WhatsApp and Facebook, obviously. Well, if Instagram is its own standalone company, they would have to invest in AI kind of on its own. And so would WhatsApp. And so it could distribute that a little bit, which actually could benefit a little bit the semiconductor industry. Moving over to Apple, start of the week at 208, drifted lower by about 5.5%, finished the week at 196. We're about 2 weeks away from hearing from Apple and really all of these companies outside of Nvidia. Over the weekend, Trump exempt smartphones, computers, and other electronic equipment from those, quote, reciprocal tariffs, which are absolutely astronomical from the country of China, including 145% tariff on products coming into to the United States from China. That would obviously include the Apple iPhone. There is still a 20% tariff on this. And so it's not that smartphones are moving tariff-free from China into the United States. There is a tariff that was already in place. I think these are known as the fentanyl tariffs on China. If you're trying to keep track of all this stuff, I probably wouldn't, because it's so confusing. Nobody understands what's going on. I think even some people in the Trump administration have no idea what tariffs are in place, which apply and which don't. Companies are still trying to figure this out. So are consumers. And obviously, this is something that's going to play out. At least you have some temporary reprieve. And the word temporary was emphasized by Commerce Secretary Howard Lutnick, who calls the exemptions just temporary. How temporary they happen to be really is anybody's guess at this point. Trump administration says they will look at the whole electronic supply chain. I'll give you a little bit of spoiler alert. I was at the Consumer Electronics Show, as many of you probably know, back in January. Most of the electronic supply chain is in Asia and, that region of the world. And there is no way to diversify it anytime soon into America or even other regions. And so you have to either play ball or people are going to pay more for the products. Now, Apple is adjusting. Apple iPhone production in India rises 60%, as you'd expect. They are going, I'm sure they have their foot on the gas trying to expand production in India, as iPhones obviously sell well through the year. But as we move into the new model, the company is going to have to navigate this while trying to launch a new model, launch new features. You obviously have these large tariffs if they get put back into place. $2,000 iPhones probably become maybe not a real thing, but maybe $1,400, $1,500, $1,600 iPhones will. Now, executives are going to use an OLED panel from Samsung for its first foldable iPhone. We've been hearing rumors of this foldable iPhone for many years. Is if you look across Google's product line and I think Samsung as well, they have these foldable screens. And when I was at Google's headquarters, they have a little area there where the kids can kind of play. There's a little shop, and they have all their products laid out. And I actually got hands-on with one of the Google phones that fold, and it was actually pretty cool. And so Apple getting into this will be interesting. The price of the device could be $2,000. That is probably before any reciprocal tariffs apply. So if those do apply, you're probably looking at like a $3,000 or $4,000 phone. We'll see what the demand is here, because now you're getting into a $2,000 phone. And I know here in America, a lot of the purchase price of phones is subsidized. So you pay, or it's like a payment plan a lot of the times as well. And so you're not always paying for the full price of the phone up front. But when we're talking about a $2,000 phone, now you're getting into the price, over the price of a MacBook, certainly an iPad, and those types of things. Will consumers buy these in large enough quantity? I mean, first of all, consumers will buy these, but in the context of a $3 trillion company with already, massive amount of sales, interesting to see. I don't think I would spend that much on the phone, but I'm certainly not one to judge, as I've got a phone that's recording this that is many years old. Now, the company did take the top global spot in the smartphone market in Q1. This is good for Apple because this is the first quarter that they've done that. This despite challenges from really across the globe, particularly there in China. Now, moving on to Amazon, start of the week at 184, and understandably, this stock is drifting lower by about 6%. You want to see it technically. There's probably some interesting opportunities there. Probably not it being talked about enough in financial media is the fact that a lot of the third-party sellers on Amazon, which are the individual sellers, when you buy something on Amazon, most of you probably know this, but when you buy something on Amazon, some of the times it comes directly from Amazon. Sometimes it's a third-party seller who sometimes ship the item from their own warehouse, but a lot of times it's in Amazon's warehouse. It's seamless on Amazon.com to where you barely even know. But if you're a seller, like I have been in the past on Amazon, you're very aware that the Chinese market took over Amazon. In fact, that is the number one reasons why I don't sell on Amazon anymore. I used to sell maybe about 250,000 of goods. It was very easy. It was once or twice a week. It was kind of an import-export business, if you will. And then China sellers started to take over. And you see that, more recently, 50%, over 50% of the top Amazon sellers are now China, where just a couple of years ago, it was well south of 20%, 30%. And so this has caused Americans to stop selling on the platform because you can't compete with them. They drop the price. They steal your IP. They do all this stuff. And so in the short term, this is probably bad for Amazon, as you'll have these tariffs, particularly as it relates to a lot of the cheaper goods and the toys and those types of things. Those sellers are going to have to pull back from Amazon. And in some ways, it's going to be lost revenue for Amazon, but that seller will likely get replaced by an American-based one. Now, moving over to Netflix, start of the week at 9:33, and the first company to report from all of these shot up higher, up 4%, finished the week at 973, as I'm seeing in the after hours, and we didn't have trade today, so we'll see how this follows through on Monday. But shares of Netflix closed after reporting earnings at $1,000 per share. So this 4% gain is actually probably closer to, I would assume, closer to about 7 or 8%. There's a lot of talk on financial media that Netflix could be, quote, recession resistant. That is because consumers will cut spending across the board, but they might not cut off Netflix. Now, earnings were fantastic. I posted a video here on the channel. You're more than welcome to check it out. 12.5% growth over at Netflix. Everything looking absolutely phenomenal. We'll clean things up with Nvidia. Start the week at 112, and it hit the reverse button and down. Wow. Nearly 10% down on Nvidia to finish the week right at 101. That is a key, or right above a key technical level. We'll look at that in a moment. Now, the company obviously had an up and down week. I'm going to take you in chronological order so you can feel the turbulence that Nvidia felt this week. It ticked up earlier in the week when it said it was going to manufacture and test chips right here in the great old United States of America. They're going to invest, I think it was about $500 billion in Arizona. My guess is this is pretty darn close to where TSM is setting up there. We also posted a TSM video over on Equity Empire. Boy, you're going to want to check out those earnings as well. They got 1 million square feet of manufacturing space here in the United States. We'll see if Nvidia follows through. There's some speculation that many of these companies are going to commit to this type of thing, and then understanding that President Trump only has, or at least most people believe, only a 3-year term, unless he somehow runs for a third term. But aside from that, aside from violating, I would assume, the Constitution or some kind of law, we're assuming that Trump probably only has about 3.5 years left. And so it's possible that some companies commit in air quotes to this type of stuff, but then don't follow through and actually build or actually do what they said. We saw that during the first administration. I think Foxconn committed to something and they didn't necessarily follow through. So that was the good news for Nvidia. And then it got backslapped. The United States government informing Nvidia that it's going to require a license to export its H20 hardware to China. The H20 is a modified version of the Hopper to get around restrictions that were first put in place during the Biden administration. To take you to a very quick timeline of this, before ChatGPT was even a thing, and when you go and read the early articles about chip sanctions from the United States into China, it didn't even mention the word artificial intelligence, doesn't even mention AI. That wasn't even a buzzword. That it wasn't even the reason why they did that. My guess, though, is you had national intelligence understanding, probably knowing exactly what OpenAI was doing and what was coming, and so they wanted to get out in front of that. No really big problem with that as an American, national security, whatever. But what happened is they kept moving the goalpost in the Biden administration, kept tightening restrictions, trying to clarify them. Nvidia was doing its best, along with AMD and others, doing its best to meet those restrictions or come underneath them and do what's best for their business. They developed this H20 chip. It was selling basically like hotcakes into China, and now you have an outright ban. We know this is an outright ban, even though it says that it requires a, quote, license. Nvidia quickly, and same with AMD, quickly wrote down this inventory to zero. And the number that I think we got out of Nvidia was $5 billion. Just understand, that is Nvidia's cost. You have to add on like 75% gross margins. It ends up being, the estimates I saw, probably 13, 14, even $15 billion of revenue, probably over the next year. So you are going to have to trim your revenue estimates as it relates to Nvidia. Also, AMD doing, I believe, an $800 million write-down. Obviously, from a dollar perspective, a smaller amount, but for an AMD, certainly a big hit for that company, as again, it's coming from a smaller revenue base as well. China, for its part, is going to mimic, copy, and steal. They're still going to get access to Nvidia's chips. They'll probably even get access to the high-end Blackwell chips. They will get that through one way or another through the borders of China. It's a big country. It's a big world, and these things can't be controlled. The belief, though, is that this is a shot across the bow from Trump to China. Here's the thing to understand is Biden didn't know a damn thing about semiconductors. We know that Trump doesn't know a damn thing about semiconductors. This is semiconductor policy that is being written and implemented by the national security of the United States. And the problem, one of the problems, I'm not trying to criticize national security, certainly not trying to criticize anybody in the armed forces. We support you, salute you. But one of the problems is the way they look at the world is they're just looking at a 1 or 2% edge or advantage over China in the event that we go to war with them anytime. They're not looking a year down the road. They're not looking for 5 years down the road. They don't care that if China is not going to get access to the Nvidia, they'll figure out a way to copy, steal, and eventually get access to it or make their own competing product. National security advisors don't care about that. They care about winning a war that might start tomorrow. And so this is one way to give yourself a small edge, but in the long run, it's not going to do anything. It's not going to do anything. JP Morgan believes both Nvidia and AMD's earnings will take an 8 to 10% hit on the restrictions. And that is why you saw basically both of those stocks fall by about 8 to 10% this week. That is not stopping Jensen Huang, though, from jumping on the jet. And guess where he went? Right to Beijing. Very interesting that he gets the H20 ban and then he hops on a plane and makes his second visit to China in just 3 months. So we'll see what Jensen Huang has cooking up in the great country of China. Moving on to Google, start of the week at 159, down 5%. Wow. Google reporting earnings next week on the 24th. That is Thursday, I believe. Finish the week at 151. Temu, the popular Chinese app where people buy cheap stuff that falls apart the minute you get it. I don't understand the appeal of cheap Chinese goods, but there's plenty of Americans that for some reason do. Temu is slashing United States ad spending and their app store rankings plummets after those Trump tariffs. If there's any benefit, if there's any upside to the tariffs, this is one of them. Temu takes away business from Walmarts and Amazons here in the United States, takes away employees' opportunities at shops like Target. And certainly as we move down the stack into mom and pop stores, Temu is taking business away from them. It takes dollars here from the United States and just sends them directly to a Chinese manufacturer. America benefits very little. Now, in terms of Google, there was a lot of United States ad spending. I saw a lot of commentary as it relates to this, basically commentary from people that have never spent $1 on ads. I sit here saying that I've spent about $500,000 of my own money on ads that I've set up myself and I've ran. The way ad spending works on sites like Google is it is an auction. So yes, Google is going to see a little bit of an impact, and so is Meta, from Temu slashing and other Chinese sellers slashing their United States spending. It might be a 1 quarter, 2 quarter, maybe even a 3 quarter type of thing where you see a little bit of adjustment, but just understand that it's an auction and that Temu is outbidding somebody else for that ad placement. So if Temu goes away, it's not like the revenue goes away 100%. There is another advertiser right behind them, usually at maybe a slightly lower bid, maybe a slightly lower ad budget, but there is another advertiser right below that. Now, will it convert as well? Will they have the fire hose in terms of just blasting ads like Temu did? Maybe, maybe not. But this isn't a dollar for dollar loss. When you see headlines like this, many people believe that these ad dollars completely go away. No, it's an auction, and there's another company right underneath there with another bid. Now, we've got Google getting slapped around by the courts as a judge rules that has illegally monopolized online ad space. It's probably why the shares have done pretty well over the past 25 years or so. You also have the fact that the company is standing trial this week, I believe, in their divestiture chase against the United States for Google Chrome. Obviously, a lot of negative, very negative headlines are coming from Google. So if you own shares, just buckle up for that. Gemini users, which is their AI platform, are going to be able to create videos. This will be a story as we move into Blackwell and as these cloud hyperscalers scale up more capacity, because initially, obviously, ChatGPT was text. Then they started introducing images. And when they introduced memes, like we talked about a week or two ago, it basically shut down the whole site. What is also going to shut down the site is when, in a good way, in terms of demand, is video. Once the average person can start making videos, I promise you they're going to sit there and do that a lot. Moving on to Microsoft. Started the week at 391. This one down about 6% to finish the week at about 367. 52-week low on Microsoft is 344. This might as well be the OpenAI segment. That is because OpenAI released a new GPT 4.1 models at lower cost to developers. This is what you're also going to see as we move forward. Access and API calls to these AI models will continue to reduce. Some people might see that as a negative. No, this will just be able to expand access. There'll be more applications. There'll be more developers. There'll be more examples of other companies using these models because they're getting cheaper. Company is apparently building a social network. This could be a stab at Elon Musk. After Musk tried to buy OpenAI and is currently have a lawsuit, Sam Altman fired back and said that they would buy Twitter for $9.74 billion if he want, which seems a little underpriced considering the valuation of Twitter these days. OpenAI released a new O-series model capable of producing useful, quote, useful and novel ideas as well. OpenAI, though, is also in talks to acquire Windsurf for $3 billion. It's a coding tool as these turbo dorks that run these companies just continue to lightning focus on coding. And I don't know if you guys saw this, but the CEO or former CEO, one of the founders of Google, is saying that just, I think over the next year, there's basically going to be no coding being done by actual humans. So I apologize if you got a computer science or computing engineer degree. You're probably going to have to pivot, or maybe probably I would just go to kind of founder and startup mode. It's not that like having knowledge of coding is going to get completely evaporated and not be useful. It's just you're going to have to apply it different. You're not going to be able to sit back there and actual code. You're going to have to create something and build something, build an application. That's where it's going. Now, OpenAI's $500 billion of Stargate might mull a UK investment in the future, as the company continues to explore overseas locations for its AI infrastructure. As you have parts of the EU, I believe, with privacy laws and things like that, I think these companies, particularly the AI companies, will have to have investment there. And I don't blame the EU for wanting investment to be set up there. And the privacy laws probably have some merit as well. Moving on to Tesla. Start of the week at 257. Flip the stock in reverse, and you are going backwards on Tesla, down 6% as we are just days away from Tesla. 22nd, which is Tuesday, you have Tesla reporting their earnings, although I think they're announcing it, or they're advertising the earnings more as a company update. So we'll see what they happen to say. My guess is they are going to be in full-blown pump mode over at Tesla, and they are slimming their Cybertruck production targets, and they're moving staff to Model Y lines. Probably good news for the company. The Cybertruck, at least from a design perspective, certainly the price as well. I think when you combo the design of the Cybertruck is either a very much an acquired taste, or it's something you either really like or really hate. Also, the price just puts it in a category of vehicle that's not for the common person. Also, if you're a truck guys tend to be really loyal to either Chevy or Ford or Dodge or whichever one it is. And so it's a tough market to break into. I think the Cybertruck is in general a very successful product, but it is always going to be somewhat niche compared to like the Model Y, certainly the Model 3 as well. Fact is, it looks like the Model Y is selling still relatively well, although the company lost some traction out here in California with registrations down for a 6th straight quarter. So you have 6 quarters in a row where registrations in California dropped, including a 15.1% year-over-year drop, even as the overall new car registrations in California rose 8.3%. It's possible too that California, I live in California, I drive around all the time. There's a ton of Teslas here. Obviously, it's probably the biggest market here in the United States, I would assume. Most people that have wanted a Tesla have bought one, And so, and look, you just have there's just a lot of great cars out there, and Tesla's just one of them. Obviously, when we're talking about Tesla, you've got a $700 billion valuation on this one. It will never, ever, ever hold that valuation if this is just a car company. And that's obviously the bull case argument, that it's not going to just be a car company. It'll be an energy company, an AI company, a self-driving company, a robotaxi, a robot company. And if it does that, then you have a chance of achieving and exceeding the valuation that it currently has. Now, on its earnings preview, you're going to get an update on some new models. Many people will be looking for a, quote, cheaper model, which they have teased and talked about. A robotaxi launch, which I believe is scheduled in June. So we're just maybe like 2 months away. That's not a full-blown launch, but it looks like I believe in Austin, Texas, you are likely to see that. I'll be interested to see the energy and storage business, which looks like it's still humming on all cylinders, and that could potentially be where most of the profits come from. Tariffs in the automobile sector could threaten Tesla's Cybercab and semi-electric truck production plans. It's because you acquire components, particularly here in the United States. A lot of them come from Mexico. You do get some from China and other places. They're obviously imported into the United States or imported into one country, assembled there, and then that part is assembled or actually exported or imported here into the United States. I know Trump did say some stuff this week as it relates to automobiles that I think to paraphrase completely what he said, but he understands that the supply chain just can't instantly move from China or Mexico into the United States, but that he would try to encourage that. Whether tariffs are the best method to do that, it's not really for me to decide, and really nobody cares, but we'll see what happens there. Moving on to the technical segment of the show, the S&P 500. Look, we did wick through this area, that has held for several years now, but we are still inside of the channel. The question on everybody's mind are these lows that we made back, like a week or so ago, down at the 4,900, maybe 4,800 level on the S&P 500? Are these the lows? Are they not? Is this downtrend? I mean, this is a knife. This is not a falling knife. This is like a knife that has been thrown by like one of those professionals on a stage or something. This is like a speeding bullet. Will you find support here? Certainly temporarily it has. I think the one comfort investors can take is usually when you have this steep of a drop in such a short period of time, it is actually pretty darn hard for it to continue to go. But we're living in extraordinary times, and the stuff that Trump is doing with the tariffs and things like that, that is extraordinary. We just never have seen that before. And obviously, we'll see what happens. Meta doesn't report their earnings until April 30th. So, we've got another week or so before they report, a little over a week and a half. It is on kind of an area of support, but boy, you've got that trial and those types of things. I think this is a buying opportunity with Meta. It just doesn't mean that the full retracement is over. Wouldn't surprise if you come down here and retest these highs back here at 400. Meta, the long term, still looks particularly good. Apple, also just hanging on a cliff. You did wick through the area of support, but we did that in 2022. Kind of have these washout moments in the stock market. Is this one of those moments? Again, it's hard to tell, at least in the shorter term, but as the case, like I said, with the S&P 500, when you go from 245 in January to 172 on a stock like this, I understand the tariffs are extraordinary, particularly as it relates to a company like Apple. This is an extraordinary move. You don't normally see moves like this that aren't supported by at least a little bit of a comeback, and that's what we're seeing, at least with Apple. It's also in a buying zone. Speaking of a buying zone, Amazon is in a buying zone, right in the middle of a buying zone. I will switch this over to a weekly view, so you'll see what this yellow line is. This is more or less what I would call the long-term trend. So you have kind of a convergence there, sideways consolidation during the 2021 era, and then you've got support there. Amazon isn't all clear from the tariff perspective, Chinese sellers and all those types of things, but things look okay. Netflix is out of all of these. People are always like, kick Netflix off the show. Stop talking about Netflix. It's like, no, we want a segment where we talk about entertainment and TV. I think it'll become a more exciting space in the future, but technically this one's in the best shape. In fact, technically, if you've owned this one, it's probably outperformed like most of these stocks outside of probably Nvidia. This dating back to about 2022. I mean, in 3 years, we've gone from 180 to 1,000 on this one, and it basically has not hesitated at all. I'm on a weekly chart. You've never gone more than like 3 or 4 weeks where this stock has gone down. super resilient, and they're in a market where their competitors absolutely blow ass. I mean, I don't know how else to say it. Netflix is head and shoulders above everybody, and it's a great stock. Nvidia, finding some, so I've got 3 levels of support. The thin area is at 100. A little bit firmer down here at 95. Rock bottom is down here at 85. So I know we fell this week. We're at 100 on this one. You don't get earnings with this company for another month, actually over a month, May 28th, but you will hear from AMD, other companies. We heard from Taiwan Semi, ASML. Videos are over on Equity Empire on those. Boy, you have to look at those. You have to also read the conference call from American Express. My God, if you want some good information, you pull up that stuff. Look, you've got support with Nvidia at these levels. It's going to be hard, I think, to reverse these unless you get tariff reversals. You get China and the United States coming to the table as it relates to semiconductors. I mean, if the Chinese market opens back up, this thing, back to the highs at 150. Google, I know with all their troubles, and be prepared this week, you are going to have massive amount of negative news flow as it relates to Google. Now, they could counteract that on Thursday when they report earnings after the bell on the 24th. Just understand this purple line is the longer term trend. If you get a pullback to that, it wouldn't surprise me. Really bad earnings, really bad court case updates and stuff like this. Yeah, you're probably coming back to the 130s on this one. That's a good spot to buy it because it's back to a longer term trend. Microsoft continues to hold desperately onto this 365 level. We've done a full back test of the highs that we made back in 2021. It was the breakout point of 2023 as well. This is an area that you want to see hold. Technically, long-term sellers, everybody's going to try to hold this 367 level on Microsoft. Then finally, Tesla, it is setting up in what I call the middle of the sideways consolidation. The stock, as most of you know, has been going sideways for basically 5 years now. The bottom of the range is 103. The top of the range is 489. It is sitting essentially right in the middle of that. It's waiting probably to break one side of the other. You get full hype mode Elon Musk. If he's like, hey, I'm going to step away from the government and I'm only going to focus on Tesla. Well, this thing probably rallies. If they announce a low cost car and maybe the profits and all those types of things on the vehicles that they currently have is better than expected, then you probably have a move higher. The stock really, honestly, since 2023 has actually been in an uptrend where you have a series of higher highs and higher lows. This is a key area of support. If you break lower on Tesla, you are likely testing areas back into the 150s, 160s, maybe even potentially lower than that. The purple line that I have on the screen is what I would call the long-term breakneck trend. The stock historically has consolidated very tightly for long periods of time, many, many years. So what Tesla is doing is actually completely normal just based on what it has done over its history. It consolidates for a long period of time, then they announce something new. And so the bull case for Tesla is they announce something new. The company has probably 4 or 5 things that it could potentially announce. If all 4 or 5 of those things converge and are really, really good products, then yeah, you're probably going much, much higher on Tesla. Folks, that was the FAANG Stock Recap Show for Friday, April 18th. Hopefully you guys have a great weekend. We'll see you next week for earnings here on the channel with Tesla and Google. In the future, I am going to post the blue chip stocks, the FAANG stocks, if you will, here on the channel for quote unquote free. The rest of the earnings videos, you just don't get any benefit posting them here on YouTube for free. It's just not worth it. It's just not worth it. So we are going to put all of these videos. And the great thing about the Equity Empire subscribers, particularly the ones of the past week that have just shown such great support, is you are going to get a lot more content. Instead of being able to do 24 earnings videos a quarter, now I'm going to be able to do 60. So I really appreciate all of you that have signed up for Equity Empire. You're going to want to do that. I have links down below. You're going to want to do that. I want to raise the price, but I want to give everybody an opportunity to sign up. I've really only mentioned this on like 2 videos. I haven't even really put this out to the broader public. We are going to start advertising and doing all these other things, so it's going to become a much bigger thing. And again, what you see here is just a small piece of what's coming over the next year or so. We have a complete plan of what's coming, a lot of features, website updates, all this stuff is coming. And again, I want to appreciate everybody over the past week. It's amazing that it's only been 7 days, and I've got to sit down for probably 4 or 5 hours and send thank you emails to all of you that subscribe. Thank you so much. I'm really looking forward to that. Probably do it tomorrow during the Laker game. Go Lakers, and I'll see you guys next week. Good luck with your investments.